Welcome back, everybody. Thanks for tuning in. If this is your first time here, welcome aboard. My name's Josh Parker, your Austin original realtor, here to help you find that dream home, investment home, sell your current home, upgrade to that new home. Today, we're going to talk about how to buy a house. Episode 1 is all about finance. First step in buying a home, last step in buying a home, when you sign the dotted line, it's all about money that somebody has given to you to purchase that home. So let's break it down on why it is important, especially in a seller's market, to have all guns blazing, understand how to make that first step in that offer very competitive so that you have the best chance to win the offer. So let's break it down. Most people jump online, go to their bank, go to Lending Tree, go to whatever, and they fill out a pre-approval letter. Comes back and says, great, you're pre-approved for $500K. They stop there. They call their buddy that's a realtor and say, go show me homes. I'm approved for $500K. In this market, that doesn't always work. There are 20, 30, 40 offers on some of these homes, so if you're not standing out above those 20 or 30 offers, you're not going to get the house. It's just the way it is in this market. So, my suggestion, get it fully underwritten. What does that mean? It means that you have met every condition that bank is requiring in order to give you that loan for the house. What steps do you have to take in order to get there? Well, let's talk about that. Bank is going to ask you for a handful of documents. Whatever it is, whether it's loans, bank account info, your shoe size. No, just kidding, they don't do shoe size. But they're going to ask you for a laundry list of items that they want you to provide to them to show that you can afford that house. Typically, this is done after you've been accepted, gotten an offer accepted on your home, and so you have a condition in your offer that says, I have X number of days to get all these conditions met and get that financing. Typically, it's 18 to 20 days. Now imagine if you didn't have to check that little box and you could go in and say, I've already met all these conditions. So to the seller, to the listing agent who's reviewing these offers, and they look at that and they go, oh look, they're already through this process. We don't have to worry about funding this deal. So now you've set yourself apart from 99% of the other clients, the other buyers that are on that market making the same offer you are. The only difference is now you stand out because you've gone that extra step to get that fully underwritten approval. So, how much time does that take you to do? Well, really that's on you. They're going to ask for all these documents. If you can get them back within that day, typically within 72 hours, you can get a fully underwritten approval and be ready to go out and house hunt. If you lollygag about it and you take a week to get it, well, guess what? Now you're a week and 72 hours again. So, if you'll do the little extra work up front, ask your lender to get it fully underwritten, have that ammo, so that when you find that dream house, you can go in, get that condition met, not have to check that box, and off to the races. Now it just becomes a cash side, money issue, and getting creative on the actual offer to what you need to do. So finance is absolutely critical. Number one, it's how you buy the house. So understanding finance and how to get the best looking offer on the table is critical. Don't be like the other 99% that just go online, get that pre-approval, and then want to go out and look at houses. Unless you set a ton of cash aside, you're not going to stand out over anybody. Now, the other side to finance is money down. What type of loan are you going to do? Are you going to be a VA? Are you going to do FHA? Or are you going to do conventional? Now, in this market, conventional seems to be king because you're having to waive appraisals with the amount of money that homes are going over asking and over that appraisal. So, keep in mind, how much money have you set aside? How much are you willing to spend, knowing that in a couple of years you're going to gain equity back? Is it worth that financial risk at the beginning to get the house that you want, spend the extra cash above the appraised value, and hopes that it gains that value back in the next year, year and a half, 2 years? I would say most of the time, yes. Real estate typically doesn't go down very often. And if it does, it's a financial crisis. It's something that the Fed hasn't figured out. So throwing that money into real estate is typically a wise investment. Is it always? Absolutely not. I can't promise you anything. So, conventional loans, 3.5%, 5%, 10%, 20% down. The more down, the more attractive the offer looks. And obviously, if you're going over asking price, being able to have that cash set aside and understand that if it appraises at X dollar amount and you offered $25,000 over, that you have to come out of pocket with that $25,000 on top of your closing cost, on top of your percent down that you agreed to with the bank. So keep that in mind as you go out and start looking at homes. And let's say you're approved at $500,000 and you don't want to go over that amount. Well, in today's market, I would look in the low 400s and understand that I need a certain dollar amount that I'm willing to go over that asking price. In this market, 10 to 20%, maybe a little more depending on what part of town you're in. But understand that that value is going to continue to rise at least for the next few years. I don't see it slowing down. So, episode 1 today, all about finance. I hope this little tidbit helps. Be sure you hit that subscribe button so that you don't miss out on episode 2, 3, and 4, and a few more, and every other video in between then and now. Have a great day. Once again, my name is Josh Parker, your Austin Original Realtor. We'll see you soon.